Have you ever watched an ice cube melt in your hand? You're sitting there powerless, unable to stop the ice cube from turning into water and disappearing completely. Many traders feel this way when they watch their profits turn into losses. Every trader has at one point or another had a winning trade turn into a losing one. And when it happens, they're pounding the table, wishing they had taken those profits. This happens to many traders on a daily or even weekly basis because reversals are only obvious in hindsight. In this video, I will share with you some tips on how to maximize your profits and minimize your losses and prevent winning trades from turning into losing ones. These 5 tips are developed from my own trading experience because as a real trader, I'll be the first to admit that even after trading for 25 years, this happens to me too, but I've deployed safeguards to minimize it. Tip number 1, you need to understand what a realistic target is for your trade. This is probably the most important tip that I have for you because the most common mistake that traders make is that they hold out for the bigger move. And when they do that, they only see the trade reverse and stop them out because they're waiting too long. The reason why this is so common is because most traders are taught to strive for a 2-to-1 risk reward or better. That means that for a 30-point stop, the target should be 60 points or higher. For a day trade, 30 points is probably the minimum for a stop. 10 or 20 points is far too small. You might as well be stopped out on small retrace plus spread. But the problem is that 60 points is also a very big move for a day trade. For the forex market, which is the market I trade, in a given trading session, 60 points is probably the maximum move that we can expect on an intraday basis, unless there's a very important piece of data or news to justify an even larger move. So what are the chances that in the 1 or 2 hours that you're day trading, you'll be able to capture what could be the maximum move of the day? And here lies the problem. You're a trader with a reasonable 30 pip stop for your day trade. The trade moves 20, 30, 40, maybe even 50 pips in your favor if you're lucky. And then it starts to reverse, never quite making it to 60 pips. It goes to 45, 40, and then the gains completely disappear and turn into losses. We've all been there, and for some, it happens more often than you think. It can be even more painful for positional trades, where you need at least a 75 to 100 point stop. For a 2-to-1 risk reward, you'll need a 150 to 200 point target, which is a big move. It can take weeks or months, and sometimes get close but not quite get there. I've seen it happen all the time, and I know many of you has as well. So what can you do about it? I recommend having a short and more ambitious long target. The first target should be easy to achieve, like a 1-to-1 risk reward. That means if you're risking 30 pips, your first target should be 30 pips maybe. Exit half the position at an easy to achieve targeted amount. Move your stop to break even and then aim for 2, maybe 3 times risk reward on the remainder of your position. The idea here is that if the trade continues to move in your favor, wonderful. You can trail the stop up as it moves and lock in more profits. I like doing that by every 40 or 50 points, for example. If the momentum fades and it moves back to your initial entry price and stops you out, no big deal because you made money on the first half of the position and avoided losses on the rest. Tip number 2 for maximizing profits and minimizing losses. Know when a move is overdone. Oftentimes there'll be breakouts on the back of a news release or a market open, and you can make profits riding that move. We did that on the back of the US inflation report. One of my favorite ways to trade major news releases is to wait for the 5-minute candle to close, like you see here, to make sure that the move is sustained and not reverse instantly. Then I like to enter the move for a quick 20 to 30 pip profit. In this trade, the initial entry in $yen is 144.77. 30 pips is reached within the first 15 minutes, great, and the max move is just over 60 pips from the entry. There are also 2 times a day where a move is likely to lose momentum, so if you want to maximize profits, it may be a good idea to take profits before those times. And that's right before or around the US equity market open at 9:30 a.m. New York time, or near the London close around 11 a.m. New York time. Tip number 3 for maximizing profits and minimizing losses. Be patient. Even if a trade is moving against you, if you did your homework and you trust your trading strategy, don't get out impulsively. I've been trading my zip strategy for years, and I've found that there will always be retraces, small moves against me that can lead me to second guess my trade. However, statistically, More often than not, all it takes is a little patience for the trade to work itself out. For example, I went long dollar CAD when I saw not one, not two, but three zip buy signals, which is the white candle on this chart, against the green background. The green background tells you what the longer term trend is, green for bullish, red for bearish. And where the instrument is trading in relation to the indicator line tells you whether the short-term trend is bullish or bearish. If it is trading above the indicator line, it's bullish. If it's trading below the indicator line, it's bearish. Here we have 3 zip buy signals. Great, so I take the trade. Then if you look closely, it moves in my favor, but then it drops back down below the indicator line. Impulsively, I could say that the setup validated itself, but with a little patience, you can see that it bounces back above the indicator line and then moves 40 pips in my favor before peaking right at the London close, 11 a.m., the time that I mentioned as ripe for reversals in tip number 1. You want to maximize your profits by closing before 10:30, 11 a.m. New York time. This happens all the time. Before I get to tip number 4, if you like this video and you're not a subscriber, make sure you subscribe to the channel and hit the notifications button. You won't want to miss other unique tips and trading strategies like this. Tip number 4. For maximizing profits and minimizing losses, have a daily or weekly or monthly profit target in mind. Having a trading goal can go a long way in helping you control your emotions and your impulses, which is the trickiest part of trading. My trading goal is 100 pips a week, which doesn't sound like much, but it adds up to 300 to 400 pips a month or 3,000 to 4,000 pips a year. My zip strategy won 9 out of the last 12 months. 2 of these months were a nominal loss of 75 pips or less. All of this is important because it affects my own trading behavior. At the beginning of the week, I tend to be more proactive, going on the offense, taking more trades. But as the week progresses and my profits are building up towards my target of 100 pips or more, I will trade more defensively to protect my gains. Pocketing pips regularly is the secret to becoming a consistently profitable trader. Tip number 5 for maximizing profits and minimizing losses is to avoid trading ahead of major news releases. Spreads widen, the volatility after a number increases, so if you have a small stop, there's a very good chance you're going to be stopped out. If you want to protect your capital, it's best to wait for the economic report to be released and then take the trade. It goes without saying that most important way to minimize losses is to actually use a stop. If you want to learn how to become a better trader, check out the links in the description below for discounts on my trading course, my go-to trading strategy zip, and my trade ideas. I'll see you next time.